the rate that you're paying now, but when you go to sell your house, the house is you're going to have a difficult time selling your house, and that's certainly going to have impacts on property values and the ability to sell, and even on tax revenues. Now, this won't affect the people here in Dutchess County because you've already got your new map. But another change in the law is that it's always been the case that when a flood map changes, your flood insurance rating is based on the map in place at the time your house was built. So if it's a pre-firm house, you still get the pre-firm rate. If you let's say you've got a newer house and you're in the flood zone, but the flood elevation went up, you would still be rated based on the previous flood elevation at the time that you built your house. Congress said that that's going to be phased out, and that if your flood map changes, then you will go to an actuarial rate, and that change will be phased in over a 5-year period. In other words, they'll take the difference between the actuarial rate and what you're paying now, and 20% of that will be added to your insurance rating policy every year. FEMA doesn't expect to start carrying this out until sometime in 2014, over a year from now. And there's some pushback on this, of course, in Congress. My concern, and again, this isn't going to affect Dutchess County because you've already got your new maps, but one concern that I have is that we have so many areas where maps need to be updated. They don't reflect the current risk. And if it's going to affect people this way, local communities are going to push back very hard on any map changes, even if they're very sensible map changes. Some other changes. FEMA has always been limited to no more than 10% of annualized rate increases. That limit has been changed to 20%. Doesn't mean they're going to increase everybody's rate 20%. In fact, they announced the rates for next fall, and if you're in the same category, you're not going into this phase-in of actuarial rates. It's going to be significantly less than the 20% for most people. Most people will be less than 10%, but they're allowed to go 20. They're allowing premiums to be paid. Currently, you've got to pay your premium up front. Some people escrow it on their mortgage, but they're going to allow premiums to be paid in installments or annually. The third bullet's a good thing. Lenders are required by law to require flood insurance as a condition of a mortgage if the structure is in a flood hazard area. Some lenders, and frankly they tended to be the national banks, the big national banks, they're required to give people 45 days notice to get their flood insurance, but if somebody doesn't respond to that quickly, some of these lenders have been forced placing the insurance and taking a hefty fee in addition to the insurance cost. So Congress did push back on that. If a bank force places someone's insurance and you could show proof that you bought your own insurance, the bank has to accept that and refund what they took from you. They raised penalties on lenders for non-compliance. So a lender is required to make a homeowner get flood insurance as a condition of a mortgage if they're in the floodplain. There's compliance penalties, and those penalty ceilings have risen, so the banks will be taking this very seriously. There's no limit. It used to be, let's say FEMA went after, some, national bank, I won't name one, and found that they weren't carrying this out, they would fine them up to $100,000. Well, for